Nimesh Chandan is with us, CIO, Bajaj Finserv AMC. Nimesh, good morning. Great to have you with us here. Appreciate your time. So the question is, the small cap index has seen about an 8% move from the absolute lows recently, about 5 days back. Is the repair and recovery here going to continue on a steady basis? And or one should be a little nervous looking over one's shoulder saying, well, there's another wave coming or you think this is durable now, slow, steady, and not at the same pace we've seen in the last 5 days, but there's going to be enough to do in this space?
I think durable because it is backed by fundamentals. And this time we are seeing some liquidity support come into these areas. So as I've been saying on your channel, that we are seeing a positive move in economic cycle, a positive move in the profit cycle or the business cycle, and also a positive move in the credit cycle. It was the sentiment which was under pressure. And I think with the recent news of trade deals, that sentiment has recovered. And with the kind of deal that we've got with the US, I think there's more to come. So there's much more up move to come.
Yeah, much more up move to come. And you are active in this segment as well, Nimesh?
Yeah, we are positive on mid caps and small caps, if that's what you're referring to.
Yeah.
In fact, we are quite positive on some of the cyclicals also in terms of sectors like cement, steel, financials.
We had Neelkant yesterday with us in the studios. The Access conference kicks off today. And he was saying till January, earnings expectations are still getting cut. Is that something you've seen? So Pankaj Tibrewal was with us a few days back, and he was saying that actually, according to the data set that he's tracking, earnings growth for the small cap space, some 200, 250 companies which have reported so far, earnings growth is actually pretty healthy, actually some 35% or so. But there are outliers because resource companies and those kind of names are pulling that average up. So if you have an eye on earnings, is that earnings curve improving on the way up in terms of earnings expectations 12 months forward?
So clearly this quarter, the small caps have actually delivered much better earnings growth. Caps and large caps. So large caps, I think, have so far given about 12% kind of profit growth. For mid caps, it's about 14%, and small caps is 30% plus or so. However, you should also look at the base, how they were last year, and because of that, also some adjustments need to be made. Overall, I think we are in a better position compared to the last 12 months because we are seeing the pickup on the consumption side. There are hopes of better exports as India signs more FTAs. The cost of capital has come down over the last 12 months, and that is also helping businesses. So if you see for a business in India, if your cost of capital is coming down, your domestic market is picking up, and you have prospects in the export market, I think there is a lot to play with. And I think that also flows to the banking and the financial services sector, which we have recently seeing a good credit uptick also, credit growth uptick also.
Nimesh, 30% plus earnings growth for small cap companies. Is this kind of growth sustainable? When you chat with the companies from their conference call or you meet them, on the ground, off the record, what are they expecting in terms of, the next 12 months in terms of growth rates, and which in the small cap space is a segment that you are most bullish on?
The sentiment is getting better, Rima. Actually, from whatever interactions we've had with companies, sentiment is getting better. Yes, for many companies who are into cyclical businesses like metals or cement or so, they are seeing a much positive outlook for the coming Q4 and the next year also. Some of the companies, as I said, which were probably overburdened with these tariffs and maybe the sentiment was low as to what will happen in terms of the FTA. I think now those sentiments are recovering and those outlooks are, people are adjusting now to these new rates and planning businesses accordingly. Pick from small caps, I don't think this 30% kind of growth can continue. But there is a lot to play within this small cap space now, where quality businesses are seeing some revival in growth and valuations are attractive because the entire category went through a correction in the last few months.
So can you talk about some of these quality names in the small cap space where the earnings growth will sustain, valuations are attractive post the correction?
So actually, we've seen selectively now within different pockets. As I said, materials, we are seeing good amount of action in cement, metals, and even some of the chemicals companies. And I think you and your team mentioned some of the companies that gave results yesterday or day before and are seeing an uptick in the chemical space also. Within consumer discretionary, now we are seeing an improvement in demand after what we've seen as income tax cuts and GST cuts that have come. We have seen pickup in consumer discretionary. In terms of industrial, good companies within which are say connected to either the capex or the metal space are showing good numbers, and so capital goods, even within power sector, we are seeing many companies giving good numbers, and then there are niche players within different pockets that we are picking up, except for maybe the IT sector, which is again a top-down kind of a negative view that we have. Apart from the IT sector, I'm seeing positive green shoots in different spaces. It's how much we have to see whether the growth is priced into the current valuations.
Hi Nimesh, good to see you in. How much of the bad news is priced in though for the IT sector? Every few months you're hearing about fresh negative news. One was looking at a brighter FY27 and suddenly this tech burst has taken place in the last week itself. What's your view? Well-run companies, cash flow to market cap looks good, earnings yield, they are cash-rich companies. But I think lack of a positive trigger to get the street excited is keeping everyone away. Your view on that from the tech names?
This sentimental negative will carry for some time. Whether it is one AI company or the other, every few months probably you will see, because every company is working towards productivity gains. So every company in the tech sector will say how they can actually help the clients do better with lesser number of days. So I think this hangover will continue for some time and it will weigh on the valuations. Even the growth rates, if you see, are not as exciting as what we are seeing in other sectors. And hence, even that is probably weighing on them. But the cash flows, the return on capital ratios that they have, the dividend payments that they have, or even buybacks for some of them, may not lead to a severe fall in the IT sector. They may be confined to a trading range. I don't think they'll weigh on the Nifty in terms of moving up, but they will definitely not be a lead sector to contribute to the up move.
Okay, no, I get it. Nimesh, with full disclosure, you want to highlight one or two names you've added to your portfolio recently? We discussed some names earlier. If you remember, you were here in the studio on Editors Roundtable. And anything you want to sort of, yeah. Stuff which is part of your portfolio.
I don't change the portfolio very often. Yeah, but let's say if you see in our portfolio, what we have done is we have added cement across the space. So whether it is large cap and there is only one biggie there that we have added to our exposures. And then there are a couple of good mid-cap companies there which we have added and a couple of small caps there. So cement, I mean, there are a few obvious names that are there that we have added to the portfolios or added to the weight in the portfolios. Metals, again, for ferrous and non-ferrous, there are clear leaders in the space and we go with the largest companies in this area. So we've gone with that. This time we have added more weightage among BFSI to private banks. I think we will see a good move from private banks with all the changes that are happening in the economy and the credit growth picking up now, and RBI also being supportive in terms of liquidity. So these three sectors, if you see industrials, materials, and financials, these are the sectors you play with the up move or the economic upcycle, and those we are positive on. Consumer, we are still positive, but somehow we are finding more interesting names in the mid-cap and the small-cap segments, which are showing better growth than on the large-cap side. Large caps, though FMCG and some of the other companies, they have shown good numbers. I think valuation-wise, mid-cap, small caps in consumption are better.
Got it. Nimesh, we'll leave it there. Thank you very much for joining us. Good speaking with you, and appreciate your insights as always. Well,